What's going on, guys? Welcome to your intermediate training with the Masterminds training system. I'm right back with you, Sean Chenard, here to teach you the intermediate phase of this training. Now, you guys, this portion of the training is going to contain longer training videos, okay? There really will only be a few training videos in this section because I'm really going to put a lot of information together in each video. So it's all going to flow together because the concepts we're going to cover really work together in what's called confluence in the market, okay? And what confluence means is when something works and supplements something else. So adding different variables or different factors together to make an analysis. Okay, that's confluence. When different variables or different factors are all pointing toward the same analysis, that is confluence. So I want to talk to you about those different things in the intermediate training. That way you understand how your analysis will work and how you put the pieces of the puzzle together, okay? So we're going to cover a few things in this training, okay? Number one, we're going to go over a little bit with TradingView, kind of how it works on a basic level, okay? We're also going to talk about how to draw your trend lines, how to draw support, resistance, and a couple other things, okay? Now, let's get right into the actual drawing aspect with TradingView, okay? Now, I've already got the chart opened up on TradingView, but it's very simple. If you were to go to the TradingView website and you wanted to get to this chart, I'll show you exactly how I did that. And I want to let you guys know too, TradingView is an excellent tool. This is something that I use every single day, and I love TradingView. Number one, it's free. It's free, you guys. You don't have to spend a dime to use TradingView. And then number two, it gives you a lot of information in different perspectives from other traders. Okay, so I highly recommend reviewing this website and really looking at the value that it offers you, okay? Because I know the best traders in the world use TradingView. It's the top platform for charting, marking up your charts, analysis, reviewing other people's analysis, networking, and that sort of thing as well. So definitely make sure you get comfortable using this and familiar with where everything's at. All right, so this is tradingview.com on the home page. You guys can see here my account's right here. There's a little bit of some stock numbers there at the top. Oh, it looks like a little bit of Forex and crypto as well. And then you can see the different tabs here for different trade ideas, different markets, scripts with different oscillators and trend analysis and all that with different indicators. Screeners, so a tool that actually screens the market, charts that I have saved, and then more. Okay, but the tool you're really going to use is the search bar. Okay, so if I go up to the search bar and I start typing something in, so let's say Euro USD, for example, you're going to notice that there are different tabs at the top: all, stock, futures, Forex, CFD, crypto, index, and economy. The three main tabs that we're going to use are Forex, CFD, and cryptocurrency, okay? Forex is all of our currency pairs, right? Which is what we're primarily going to focus on. CFD is our commodities, okay? Gold, oil, silver, platinum, metals are mixed in there too. So you'll have a good combination of different commodities in there, and then cryptocurrency. So if I want to look up Bitcoin, Ethereum, Litecoin, Omis, Go, Dash, all these different cryptocurrencies will be under that tab. Now, if I just go to all, it's going to find me everything under there. Now, whenever I look up a Forex pair, it will break it down on different brokers. So if you see over here on the right, FXCM, you also have OANDA, which is Oanda. Okay, there are different ones that you can click on. The one that I always click on is FXCM. That's the most popular. Most people use that. Oanda is also good. The pricing should be about the same, okay? It'll be very, very, very close. However, I always mark up my charts with FXCM, okay? Now, if we're looking up a cryptocurrency like Bitcoin, and I go to cryptocurrency, I'm always 9 times out of 10, I'm going to click on Coinbase, but you can also click on Bitfinex. Okay. And these are just different cryptocurrency trading platforms. Binance, okay, is on there. Poloniex is on there. So Bitstamp. I usually go with Coinbase or I go with Bitfinex. Okay. Coinbase is very, very large. So I like to use larger, higher liquidity providers for my charts to get those numbers. Okay. So again, you're going to want to use Coinbase or Bitfinex for that. And then with CFD, if I look up oil, for instance, okay, I'm basically just going to click on the first one that pops up. Okay, but I could also go here to BCO USD. That's crude oil against US dollar. So depending on the pair, that will be the tab that you will want to go ahead and click on. Okay, so let's look up Euro USD. That's what we're going to be analyzing today. And again, Euro USD is the most popular pair. So we're going to go ahead and go to FXCM like we talked about. Euro FX. Usually if the base currency says FX right after it, that's the one I'm going to click on. Just a little tip for you guys. Now you can see once I click on this, there's a lot of information that I'm going to be presented with here. I can look at a chart. I can look at different trade ideas, the technicals, and the overall profile, which is awesome. I can literally come here, and if I'm thinking, yeah, I think I want to sell Euro USD right now, and I come here and I see that the overall technicals on TradingView are pointing towards a sell, that will increase my confidence on the trade. Now, keep in mind, TradingView is a very large platform. They have traders from all over the world, and they have hundreds, maybe even thousands of professional traders trading on this platform and publishing their ideas. So with that being said, you want to be conscious of what other traders are doing and just paying attention to other markups. And this is also going to help you in the learning process as well. So I can see if I look on the left at ideas, I have a Euro USD sell. So if I'm thinking about selling, I might want to look at that example. And I notice that they're a top trader. It says top author. Okay. I want to look at top or pro authors. Okay. Only top and pro authors. I don't want to look at people that are just starting out, people that don't have credibility on TradingView. I want to look at people that have the most credibility, right? Global Prime is also a pro, okay? A premium member, a pro. So I want to look at their markups because they've been doing this for a while. And you could also actually go to their profile and see how often they publish and see right here are the analytics. So you can look at that stuff as well. But generally, I just take a look at the charts. I get a good idea of what their analysis is, what they're basing their analysis off of, and then I just go from there, okay? And again, there's going to be conflicting analysis. Some people will want to buy, others will want to sell, depending on the time frame. Because again, it could be a buy on the daily, but on the 15-minute chart, it's at the top of the RSI, it's hitting a resistance, it's going to be a short-term sell, right? So keep that in mind. You want to make sure that it correlates with the time frame that you're looking at. So you can see here is the 3-day, right? The 3-day. You want to make sure it correlates with your time frame. Now, I don't trade in the 3-day, and you probably won't either, unless you're looking for a really long-term trade. So something more like this one's the 240, so that's the 4-hour. This is a more plausible trade setup for you to look at and cross-check against your trade. So I always like to look around and see what other traders are doing and cross-check what they have on their analysis against what I have, okay? And again, number one, it's going to build your confidence. And number two, it may give you insight on something that you didn't think about, or it'll give you a new idea on how to approach the trade, when to enter, when to exit, and so forth. Make sense? So again, this is a very, very good tool that TradingView offers. And by having trade ideas from traders all over the world, it is a huge strategic advantage. That's why I always tell people, like, you don't need to buy 5, 6, 7 trainings on Forex and crypto. All you need is one solid training platform with one solid strategy, and then you can cross-check everything against the information that's available to you on TradingView and other resources. Guys, There are so many resources out there for you. We're going to talk a lot more about that in the training, and that's going to be available to you. But I want you all to know what I've used in order to be a successful trader and what's working for me. And TradingView is definitely a tool that I will continue to use day in and day out, that has provided me great insight on my trades and also gives me the ability to actually mark up the chart. Okay, so that's what I want to talk to you about next, is actually marking up the chart. So let's go to full featured chart. Once you click on that, it's going to redirect you to the actual candlestick chart where you can do your analysis, okay? Great. So this is Euro USD. All right, and as you can see, we're in the 4-hour time frame. We're on a candlestick chart, okay? So those three things are going to tell you, okay, number one, this is our pair, Euro USD. Number two, we're on the 4-hour time frame, which we can click on that and change it if we'd like. And then we're on a candlestick chart, which you can change to bars, hollow candles, and there's different things as well, line, baseline. Now, for you guys starting out, I highly recommend only using candlesticks for the time being, okay? So just keep it on candlesticks. That's the most popular. You're going to see most analysis done in candles. Just use candles for now. We talked about bearish and bullish candles and different candlestick types. So now that you're familiar with that, we can go straight into analysis and kind of how we mark up a chart, okay? So on TradingView, there are a lot of really, really cool tools. So we're going to talk about a few. Number one is just your pointer. Okay, here on the left, that little dot is your pointer, okay, which you can click and you can go to different areas of the chart. So if I want to look at, oh, what's this level right here? I see that that's 1.15016. Or if I want to go to this low and see this level here, I have 1.12149. Very nice. That is my cursor. Plain and simple, it's your cursor. Number two is where you can draw lines. This is very important. You're going to use this very, very often. If I click on the little arrow next to that line, it'll give me a drop down of the different lines that I can use. Now, for you, just starting out, the only ones you really need to pay attention to are a trend line, a horizontal line, and an arrow. Okay, and that's what I use. However, there are traders that use different things, but in the first stages, that's what you're going to want to use primarily. So a trend line, a horizontal line, and an arrow. And that's really all you're going to need to draw up a trend and to draw up zones, okay? The next box, the third box down, you're going to see a pitchfork. You're going to click on that arrow to give you a drop down. Now, in this drop down, the only tool you will use starting out, based on what I teach you, okay, this could change as time goes on and you could want to use different tools. However, really the only one I use right here is a fib retracement, okay, the Fibonacci retracement. And in the more advanced videos, we're going to talk about how to use a Fibonacci and how it works in terms of calculating where price will end up and determining your overall analysis on entry and exit, okay? So again, in this third box here where you see a pitchfork, click on the arrow, scroll down, you'll have your Fibonacci retracement, which we will use after we talk about how to use it in the advanced training. Now, the next box, which I use very often, is geometric shapes, okay? So you can use a rectangle, a rotated rectangle, an ellipse, a triangle, a curve, polyline, double curve, arc, okay? The ones that I use most are going to be the brush, the rectangle, and the ellipse, okay? The ellipse is going to show you different areas. So when you mark up a chart, you could say, oh, I see that area. Okay, I'm looking at this area down here, right? And that can give you an idea of the zones that you've been looking at. And then when you go to other time frames, it'll be saved on those other time frames so you know what you're looking at maybe on the 15-minute chart, right? Okay, so that's a handy tool. I use ellipses all the time. It's up to you if you want to. It's not a requirement. You don't need to use them, okay? But I like to use them visually to represent different areas and different, when a candle touches a zone and where that occurs, okay? And then a rectangle is a great tool that I use to draw support and resistance, okay? Now, the reason why I use a rectangle to draw support and draw resistance is because a trend line is only going to show you one very small area. So if I were to do a horizontal line, for instance, and I did draw it right here at the bottom, which would technically be a support, if you look, you can see that the price also dropped right here and bounced, and then right here and right here, right? So technically speaking, there's actually a zone that price will enter as a support, okay? It's a zone, not just a line, but a zone, all right? And I'll give you a better representation over here. It's kind of difficult to see in that little area because of that price pattern. But if we take a look, if I draw my zone all the way across, you can see that this right here, this area, and this area acted as a support. So technically, this whole zone would act as a support, okay? But more specifically, I saw really price touching here, here, and here. So technically speaking, I would really consider this top zone the support, but at this time, price dipped a little low, but again, was rejected and bounced off like we talked about previously when we discussed support and resistance. So with that being said, I use the rectangle tool to draw support and draw resistance, okay? And I'm going to go ahead and draw a resistance as well. Now, I like to use green for support because to me, when I think about the color green, it represents something going up or more of something. So when I draw my resistance area, which again is where 2 or more points meet on the chart, I'm going to go ahead and draw this in red. Okay, this is going to be red because when I think of red, what do you think of? Stop, right? You think of the word stop. So if I put a red rectangle up there to identify the zone, that's going to tell me where price is most likely to get rejected and then go down, which you can see here multiple times price was rejected and went down. One right here, right here, basically across this whole zone, right? And then again right here. So that is a great example of resistance, okay? So again, that is how I will use the rectangle tool in order to draw my zones. Now, you can also have additional zones. So keep in mind, if I'm really looking at this chart, this is the top right here, right, where price is going. But you can also see right here, there's some support right here, isn't there? You see that? Do you see how support was found in this zone right here? Because price will come down, hit the zone, bounce off, right? It came down, hit the zone, bounced off, did it again here. It did it many, many times over, right? So to me, that's a solid indication. Now here, it did go lower, but it created a price pattern called a reverse head and shoulders, which led it to go to the upside. And then it pulled back and continued all the way to the upside. So we'll talk more about price patterns later. Don't worry about that, you guys. We're definitely going to cover price patterns because those are an integral part of your trading. But I wanted to show you here how there are 2 different support areas, one right here and then one lower down here. So it's important to identify the different zones on the chart as you see them. All right, so that's how you use the rectangle tool. If we go down here, I can add text, simple. The T is a text box. All I ever use is text, maybe a call out, but really just the text. And if I use it, I just click on the chart and then boom, I can type whatever I want. So if I want to type Euro USD, trade idea, and then give an entry or a take profit. So when you're marking up your chart, you can do that, give your inputs, and then put it there, right? Plain and simple. Just a little text box for you. You can mess with the background colors. All this stuff up here at the top bar will allow you to adjust the colors and the font and all that stuff as well, okay? Now, if I click on the rectangle and I want to go ahead and change that information, I just click on the dot and I go up and I can see it up here at the top. I can change the thickness of the line. I can change the color of the box. I can change the line color, okay? So go ahead and mess around with that. You guys, on TradingView, just experiment with it for like an hour or two. Go around, click different buttons, see what it does. Try to follow along with this training. So right now you should be on your laptop and actually going through and clicking the buttons as I go through them. But do it in your free time. You know, check it out. See what you can come up with as well. Okay. So down here we have a couple more advanced options for different patterns that you can draw. We're not really going to cover that in my training because I don't use harmonics and I do not use Elliott Wave. Okay. So if that's something that you get interested in down the line, feel free to do your own research and learn about those concepts. But again, I don't personally use it. I really personally don't believe in it, to be quite honest with you. So I believe in market structure and price action trading. So that's what I do, folks. That's what I do. So again, you can pretty much just ignore that, that tab there. And then this tab here is pretty cool. You can do a long position or a short position where you can actually, so if you place a buy down here and you draw up, it will actually show you the risk to reward ratio, how many pips you're going to gain, what your target is, which is pretty neat. So once you set up your analysis, you can actually measure that out with the long position and vice versa if you place a sell with the short position. But for right now in this training, I'm not really going to go into that too much because I don't want to confuse you. I just want you to be able to identify the key tools that you will need on here, which will be trend lines, zones, and maybe the ellipses and the indicators, okay? So I am going to get into indicators a little bit and where you can find those. Now, for those of you trading with my strategy, the two main indicators, which are tried and true over the test of time, are going to be what's called the RSI, or the Relative Strength Index, and then the stochastic indicator or oscillator. So if I go up here to the indicators tab, now if you have the free account, you're only able to use a maximum of 3. But guess what, folks? That's all I ever use anyway. So you probably will never need the paid account, but you can if you choose to do so. So if I go to the search bar under indicators and search RSI, the very first one that pops up, I'm going to go ahead and click on that, and that's going to bring it to my chart down below. Now, the inputs that are already set standard on your RSI will be good to go. You don't need to really adjust it. You can leave it just the way that it is, okay? And in more training videos in the intermediate section, we're going to talk about each individual indicator and the strategy behind that indicator, okay? So keep that in mind, but for now, you just need to know where to find the RSI and how to get it on your chart, and that's all you do is go up to indicators, click on the search bar, type in RSI, and click on it, and it's going to bring it to your chart. Now, the next one will be stochastic. So boom, right there, stochastic. I click on that, it'll drop it down on my chart. Now, the third one that you may use with my strategy, more particularly the scalping strategy, is going to be what's called Bollinger Bands, okay? Bollinger Bands. So I'm going to go into the search bar again and type in Bollinger Bands. The very first built-in, I just click on that, and it will bring the Bollinger Bands to my chart. So again, number 1, we have the RSI, which is right here at the top. Number 2, we have our stochastic oscillator, which is on the bottom. And then number 3, we have our Bollinger Bands, which are actually found on the chart itself. And you can see here, we have 1, 2 bands, and then with the middle band there. Okay, so that is what your Bollinger Bands look like. And I'm going to actually brighten that up a little bit visually for us here. So you guys can see what I am looking at. And there you are. There is your Bollinger Bands. So again, you don't want to overcomplicate your chart. This is a big mistake a lot of brand new traders make, is they want to have a bunch of different indicators on their chart and they're missing the point. They're missing what the market is actually doing based on its structure and price action. Now, again, as you guys remember from previous training videos, market structure is the actual structure of the market and the range that it travels in, okay? So price action, when we talk about price action, is plain and simple, the direction the price is going in. Is it going up? Is it going down? Or is it moving sideways or consolidating, okay? So in this training video, I also want to go over how to draw your trends and what that's going to look like. So I'm going to go ahead and exit out of the indicators for now. I just don't want to overwhelm you guys and give you guys too much. So I'm going to go ahead and just make those invisible for the time being. Now we've already drawn some support and resistance areas. So what I want to do now is actually draw a trend and show you what that looks like. So what I'm going to do is I'm going to go ahead and I'm going to take this downtrend here, okay? Now what you want to do in order to draw a trend is grab your trend line, and you're going to want to start at the first point and then draw it down in a straight line. And then you're going to take another trend line at the bottom of that zone and meet up with more points on the chart. So you can see here, I have the trend lines touching the bottoms of the wicks here. You see where I'm touching the trend line to the wicks? And I'm going to actually zoom in so you guys can see it a little bit better. Now, as you notice, this move did go past the trend lines a little bit. That's okay as long as you have it touching 2 or more points and the trend is parallel, okay? So 9 times out of 10, your trend will be parallel. Now, when we get into market geometry, we'll talk about a few different things where you have triangles and wedges and that sort of thing. But for now, just make your trend a parallel channel. So again, this is known as a trend or a trend channel, okay? And you can see, if I grab my handy dandy arrow, which you guys will probably use, this is a downtrend, right? This is a downtrend because price is doing what? It's going down, right? So I want to draw my trend channel to signify that we're in a downtrend. Now, why is it important to draw a channel? Because ultimately, I need to know when I'm going to get into the market and when I'm going to get out. Now, in terms of trading, when to buy and sell, the golden rule is always, and remember this, if you're taking notes, please write this down. When you trade, always trade with the trend. Let me say that again. When you're trading, always trade with the trend. Now, when we look at this zone here, remember, when price is below a zone, it's a resistance, right? And when it's above, it's a support. So for right now, I'm going to go ahead and make this zone red because we're talking about this area, and this price is actually below that zone. So that would be considered a resistance or a ceiling. Makes sense? Because the zone is above where price is at now. And down here, this is our support because price is being held up by this zone. Make sense? Now, when we look at this information that we have here, we need to decide, okay, how am I going to take this trade? What am I going to do? Okay, so again, in a downtrend, you always want to trade with the trend. So with that being said, I'm going to wait for an opportunity where price is at the top of my trend line and also hitting resistance, okay? So how can I do that? Well, if we take a look at this trend, we notice that price is going up and down in this range, right? You see that, how it's bouncing between the two lines? That's how we came up with our lines in the first place, right? But I need to find a way to trade with the trend. That way I know I'm selling because it's a downtrend. So I definitely want to sell and go with the market. You never want to trade against the market because it'll end up just blowing you out. It'll blow out your entries. You'll lose the trade. And it's always very frustrating. You want to make sure you're trading with the trend. Even if it's a reversal of trend, you can still do that. So let me explain. So we pretty much know, based on what we've seen here, if we looked and we only had access to this portion of the chart, but we couldn't see everything from this point this way. So let's pretend that all this is invisible right now. All you can see is this, okay? Actually, we don't have to pretend. I can just scroll away from it. So let's say that all of this is what exists, okay? Now, historically, what I've seen is whenever price goes into this zone, it gets rejected and goes down, right? If price is below the zone. And I can also see that when price was above the zone, it bounced off and went up. So this tells me this is a very, very solid resistance zone because price is always reacting to it. You have price reacting here, price reacting here, price reacting here, and here, and here, here and here, right? So you can see that this zone is definitely an area where price tends to reverse. Make sense? So with that being said, when I come over here and I look at my trend right now, or my channel, sorry about that, guys. I'm looking to enter where price hits the top trend line, which is this trend line, and near the resistance zone on a sell. On a sell. That is called confluence or confirmation. These are two confirmations that I should take the trade. Number one, if I'm right here, I should definitely take the sell. Why? Because when price entered this zone before, what did it do? It went down. Also, it's near the top of the trend line. Now, ideally, you want to get in when it's at the top of the trend line and then place your sell. But if you also take a closer look, remember when we talked about candlesticks, we can also see a big wick forming, right? And what does a wick tell you? A wick tells you that price is being rejected in that zone. So take a minute and think about what that means. Take a moment and think about what that means. It's simple. When price enters this zone, it gets rejected, and what does it want to do? It wants to go down. So that's one confirmation. Because price has entered our zone, and wicked down, volume is going down, right? This buy volume here is going down because there is a wick. It's being rejected, and then what happens? It goes down. So when you place your sell, you want to place your sell at the top. Remember, buy low, sell high. Okay, so place your sell at the top where the trend line meets resistance. Okay? Again, place your sell where the trend line and resistance cross or intersect, which is right here, right? There's your trend line and your resistance. You want to place your sell there. Now, with that being said, I want to show you something else too. Let me get rid of that mess that I just created. Okay. Now, with that being said, we want to make sure that price action is moving in our direction. So before I place the sell, I want to make sure price is actually going down. So ideally, I want to wait for the next red candle after the wicking doji. You can see here, here's your wicking candle. So my entry would be right here on this candle. See that? When I see the very first high volume red candle, I want to enter the trade. I want to enter the trade because I know that after this, it's going down. The market showed me, hey, look, we're in a zone where historically we always want to be pushed down. We're hitting the top of the trend line and volume is going down because we're seeing a wick. We're seeing indecision. We're seeing that price was rejected right here. So once we see our large red candle, that's when we enter the trade. Now, you're probably wondering, well, when do we get out of the trade? Well, if you take a look at the chart based on what I just drew, where would you get out of the trade? Where would you get out of the trade? I want you to think about it for a minute. Plain and simple, your exit will be the bottom trend line. The bottom trend line right here. Because you know when price hits this trend line, what's it going to do? It's going to go up, right? It's going to go up. So we definitely don't want to hold the trade past this point. So what I like to do, and this is a very, very important, this is a pro tip right here, you guys, a pro tip. There are times where price will not always come and touch the trend line exactly. So what I like to do is I like to have my exit a few pips above that bottom trend line. Just in case it doesn't come all the way down and hit, I still get out and I still catch my pips. Now, if you measure this out, let's see how many pips you would have caught on this trade. If I got in here at the top of the red candle, like we talked about, down to right about here, which is where we would get out, right? You can see where it touches that trend line. You would have caught 134 pips. So congratulations, you guys, on a standard lot, you would have made $1,340. Congratulations. And you didn't really have to hold the trade very long either. You held the trade, you know, and you made it through. It was about 22nd to the 24th, 2 days. You held the trade for 2 days. You made your 134 pips and you got out. So congratulations. You made $1,300 in 2 days because you took the sell signal and you exited the trade before it hit the bottom trend line. Again, just a general rule, I'm going to exit the trade about 10, 20 pips above the trend line just to be safe, just in case it doesn't make it to the bottom. So again, you guys, that is how you draw your trends, how we look at market structure, and really how the market moves together. Whenever you analyze the market and you do technical analysis, you really want to take a look at how does this picture work together? How do the pieces of the puzzle fit together and work to my advantage? The market will tell you what it's going to do based on what it's done historically before, okay? The secret to trading is found in what happened previously in history. And again, if you can identify these key zones of where price has a tendency to reverse, you can place your trades in those zones and with a little bit of confirmation, enter the trade and get out at the next zone. Now you can see here as well, if I zoom out, remember how I drew that little trend line to indicate where we were going to get out? Look at what's just below that zone. It's support, isn't it? Support is right below that zone. So I got out just before support. So to make it easy, I entered the trade when it hit the trend line and wicked down at resistance. I held it down to the bottom and exited just above the trend line and support. So see, I technically could have held where support and the trend line intersect. You see that? Look at this for a minute. This is very, very powerful information. Price hit this trend line and hit support, and what did it do? It went up to the top, didn't it? That is confluence. That is a confirmation that price will reverse. So again, before it gets to that zone, I don't want it to go up. I'm placing a sell. I want it to go down. I need to get out of the market well before it will do that, which is right about here. Make sense? All right, so that's how it works, you guys. Again, I would rewatch this video and go through this information again, because market structure and how this works and how TradingView itself works is going to be a key component of your trading strategy. Literally everything I teach you is based off of market structure and price action. And I'll tell you guys right now, the best traders in the world consistently rely on market structure and price action in order to make educated and profitable trading decisions. So I hope you guys gain massive value from today's training video. I would definitely go back and rewatch this training video. If you didn't have TradingView open during the video, make sure when you rewatch the video, you have your laptop open, you have TradingView open, and you can go through and actually mark up the chart with me, and that's going to give you practice. Again, you guys, repetition is the key to successful trading. So make sure you go through and repeatedly practice drawing trend lines, drawing zones, drawing arrows, drawing all these different things that we mark up on our chart. That way you can become more effective with your tools. And again, in the advanced training, we're going to go over how to use Fibonacci, how confluence works, our key 5 confirmations, and exactly how the mastermind strategy works. So in the next few training videos, we're going to go ahead and talk about indicators and how you can use those in order to trade profitably. So thanks a lot for being on the training video, you guys. I will see you on the next one.